Hello and welcome to yet another video from Bloombridge Capital. My name is Patrick. I'm a trader here at Bloombridge, and I have my very competent colleague Henrik sitting next to me. He's our senior portfolio manager, and today we're going to be talking about the semiconductors market. How is it looking right now? We will also look at Nvidia and Broadcom, because the SOX ETF, this is the iShares Semiconductors ETF, they are the biggest positions in there, so we're going to take a look there as well, and we'll be analyzing the entire chart and decide if it's a good investment for the coming year. And let's start with the following. So we can see that during the first half of the year, the SOX was actually quite a good investment because they were showing the highest earnings and highest forward returns. And this somehow faded with the onset on what happened in July, where we saw a really sharp decline. And now we're finding ourselves at the end of the year with at the same price evaluation that we had in March. So what could be the reasons for this? Why is this trade not working anymore as it has done at the beginning of the year and the entirety of 2023? What are the reasons? Henrik, please.
If we want to delve into the reason why semiconductors right now aren't doing too hot, then there's one thing we can certainly look to. And the reason why the ETF isn't doing so good in the second half of the year is precisely the reason why it did so well in the first half of the year. Let me explain. As some of you may or may not remember, in July we had a lot of turmoil in the market, especially in the Japanese market, because this was caused by the so-called carry trades. Here, investors were taking advantage of the lower interest rates in Japan. So investors were borrowing money in Japan at lower interest rates and transferring said money onto other markets, mostly the American market, and investing it there. Now, this really went to new heights in the beginning of this year, up to the middle part of the year. And the stocks that were most in hype at that time were semiconductor stocks. So a lot of this money was flowing into these semiconductor stocks. So as the carry trades were imploding and all of this money had to be brought back into the Japanese markets to pay off these debts, a lot of these positions in the semiconductor market had to be sold off, which led to this decline. So to visualize this a bit better, here we can also look at the chart of the Japanese yen. So we saw here at the absolute low is exactly when this carry trade sort of imploded and a lot of yen had to be bought to pay off the debts. And exactly in the same time frame as we have this increase here, we see a massive decline in the semiconductor stocks. Now, this also had a sort of knock-on effect because semiconductors were in hype for a long, long time and everyone thought that they were just increasing and increasing forever and to unforeseen heights. And now, because we had this huge sell-off here, a lot of people got a bit more panicked and lost all of these dreams and hopes in the semiconductor market and were a bit more cautious with this market and weren't just throwing their money at it without thinking. But now we've entered a long sideways phase, a consolidation, where people are more unsure of where this is going to go. So we have a lot of people buying, a lot of people selling. But right now, when people are expecting it a bit less, is maybe exactly the time when we might see this hype starting up slowly again, and we might see price rise again very soon.
Thank you very much, Henrik, for the insights. And now let's view the markets from a technical perspective. As we already highlighted, the market is still at valuations starting from March this year and haven't really done anything since then. So there is a higher base building compared to the base that we had last year, where we saw also a sizable decline. And what we should expect from here is a breakout to the upside. This we want to explain with the current model that we are following in here. It looks like it's a triangular consolidation where the most of the damage has already been done. And now what we should see is that at most just a little bit of a decline to potentially shake out late buyers from right there where I'm showing from the 209 level. So it's possible that we violate this level for a short, brief period of time before we start the next rally to the upside to potentially making a new all-time high. What we can also see if we look at Broadcom is that this has already broken out from this consolidation, and therefore we can safely assume that Broadcom is very likely the market leader in this branch, and it should lead the market and any other stock in the same branch to new all-time highs. It has already broken, as you can see from our buy zone. This one was triggered just a few months ago where we were recommending our subscribers to buy between 185 and 165 with a designated stop loss. Now this has been trending higher, and it's likely going to trend even higher from here. And so there's not a lot of to say in Broadcom. It's a beautiful looking chart. And let's move on to Nvidia. We can see is also a potential triangular consolidation that is coming to an end, because what you saw is a violation of this median trend line, what Nvidia basically has been following, also showing great strength by breaking out of it and now breaking back into it, but also just testing the median as we did here at the lower levels as well. And now what we only need to do is to break above this red line, which is at around 142, break above it, and this could be a nice buy trigger with a stop loss around 127, and then Nvidia should break to further new highs, potentially reaching 170 in the valuation, where you would set the stop loss for a better risk reward. You may want to check out our daily analysis on that and follow it accordingly. There we will be issuing new buy signals as well very, very shortly. This has been the analysis. I hope you enjoyed and learned something new. We wish you a great trading week, and until next time, goodbye.